Greetings, crypto enthusiasts and value-seeking investors. Today, on Stocks Telegraph, we're setting our sights on Riot Platforms, a leading Bitcoin mining company poised to benefit from a momentous event, the Bitcoin halving. But is our IoT stock a golden opportunity, or a volatile gamble? In this deep dive analysis, we'll crack open the mining rig, dissect Riot's financial performance, and explore the potential impact of the halving on its future. Will Riot become a cornerstone of your crypto portfolio, or should you steer clear of this speculative play? Let's grab our hard hats and dive into the world of Bitcoin mining. The world of cryptocurrency is a captivating landscape, brimming with innovation, volatility, and the potential for immense reward. Bitcoin, the undisputed king of cryptocurrencies, recently underwent a key event, the halving on April 19, 2024. This pre-programmed scarcity mechanism reduced the number of bitcoins rewarded to miners by half, potentially impacting the entire crypto ecosystem. But for companies like Riot Platforms, a leading Bitcoin mining company, the halving could still be a golden opportunity. In the next part of the video, we'll delve into Riot's recent financial performance to see how they're positioned to navigate this new landscape. So, stay tuned to see if Riot stock remains a compelling investment after the Bitcoin halving. Before we smash through financial data, we want to hear from you. Leave a comment below and tell us your thoughts on the recent Bitcoin halving. Did it have the expected impact on Bitcoin's price and the profitability of mining companies like Riot? Now, let's grab our pickaxes and excavate Riot's recent financials to see how they're positioned in this post-halving environment. Let's start with the current price of $10.30. While not at its 52-week high, the analyst's mean target price of $19.09 suggests a potential upside of over 85%. This strong bullish sentiment from analysts indicates their belief in Riot's future growth potential, particularly in the wake of the Bitcoin halving. Now, let's delve deeper. The most striking aspect of Riot's financials is the exceptional projected EPS growth. This year's EPS growth sits at a respectable 7.29%. But brace yourselves for what's to come. Analysts predict a phenomenal 194.53% EPS growth next year. This aligns perfectly with the expected impact of the Bitcoin halving, suggesting Riot is poised to significantly increase its profitability. Furthermore, the staggering quarterly earnings growth of 342.55% signifies Riot's recent momentum and its ability to capitalize on favorable market conditions. Here's another positive factor: Riot boasts an incredibly low total debt-to-equity ratio of 0.01. This essentially means Riot is debt-free, giving them a significant financial advantage. A healthy balance sheet like this allows Riot to make strategic investments, weather market fluctuations, and position themselves for future growth without the burden of debt. Riot's financial performance is undeniably impressive. A strong current price, analyst optimism, exceptional projected earnings growth, and a debt-free balance sheet paint a compelling picture for investors seeking to capitalize on the Bitcoin halving. While Riot's financial statements are promising, it's crucial to understand the mechanics of Bitcoin mining. Bitcoin mining involves solving complex mathematical puzzles to verify Bitcoin transactions and add new blocks to the blockchain. As a reward, miners receive newly minted Bitcoins. The halving, occurring roughly every 4 years, cuts this reward in half, potentially impacting both mining difficulty and profitability. Now, let's revisit Riot's recent financial results. Their total revenue of $79.3 million for the quarter ending March 31, 2024, showcases significant growth. Bitcoin mining revenue of $74.6 million formed the majority of their income, with a profit margin of 45%. This signifies their ability to generate profit despite the rising costs of electricity and other operational expenses. Furthermore, the increase in revenue from their Rockdale facility expansion demonstrates Riot's proactive approach to scaling their mining operations. However, there are challenges to consider. The decrease in engineering revenue due to supply chain constraints highlights the vulnerability of the crypto mining industry to external factors. The halving that took place on April 19, 2024, has already increased mining difficulty, as anticipated. This could continue to impact Riot's profit margins in the coming quarters. It's important to monitor how efficiently Riot can adapt their operations to this new difficulty level. Riot's financial performance and strategic expansion plans are positive indicators. However, the crypto market's inherent volatility and potential headwinds from the halving and supply chain issues require careful consideration. While the recent Bitcoin halving presented a potential benefit, it's important to assess Riot's performance in the post-halving environment. Their impressive financial performance, Particularly the projected EPS growth suggests significant profit potential. Furthermore, their strategic expansion plans to increase their hash rate by over 120% by the end of 2024 showcase their commitment to growth. This additional hash rate could help Riot capitalize on the increased value of mined bitcoins despite the increased mining difficulty. However, the crypto market remains inherently volatile. The upcoming halving might not have the predicted positive impact, and external factors like supply chain constraints can disrupt operations. Investors should also be aware of the potential for a decrease in mining profitability due to rising difficulty. Adding another layer of intrigue is the recent surge in Riot's stock price and the high short interest. While a potential short squeeze could lead to further gains in the short term, it's crucial to remember that this is speculative and shouldn't be the sole reason for investing in Riot. While the Bitcoin halving on April 19, 2024, was a key event, its full impact on the crypto market is still unfolding. Riot presents a potential opportunity, but significant risks remain. Their financial performance and expansion plans are promising, but the increased mining difficulty post-halving requires careful consideration. Before investing in Riot, conduct thorough research. Understand your risk tolerance and overall investment goals. The recent surge in stock price and high short interest raise the possibility of a short squeeze, but this shouldn't be the primary driver for your decision. The decision to invest in Riot depends on your individual circumstances. For investors comfortable with the crypto market's volatility and seeking long-term growth potential, Riot could be a strategic addition. However, cautious investors might prefer to wait and see how Riot adapts to the post-halving environment before committing. This analysis of Riot platforms is for informational purposes only and should not be considered financial advice. We encourage you to conduct your own due diligence before making any investment decisions. If you enjoyed this video, don't forget to like and subscribe to Stocks Telegraph for more in-depth stock analysis. Leave a comment below with your thoughts on Riot's future and the potential impact of the Bitcoin halving on the crypto market. Until next time, happy investing.